Morning, this is just a quick sound check. Can you please type yes into the chat box if you can hear me? Good day, my name is Bianca Haywood and I will be taking you through Mr. Price's results presentation. Please note that I will not be answering questions throughout the session. However, you're more than welcome to ask questions. Please type it into the chat box and I will be getting back to you via email correspondence. Let's take a look at what we will be covering today. I'm going to start off with the nature of business, followed by the recommendation, the financial review, divisional review, company guidance, and conclude with the portfolio guidance. Taking a look at the nature of business. Mr. Price retails apparel, homeware, sportswear through owned and franchise stores and online channels in Africa and Australia. Merchandise is predominantly own branded and targeted at younger customers in the mid to upper LSM categories. Now taking a look at the recommendation. On a relative basis, the share is trading in line with its historic PE average and its historic premium to its local competitors. However, on an absolute basis, we feel that the share's attractive fundamentals are fully reflected in the current share price, and we would recommend an underweight position in the share. The share boasts an exceptionally high return on equity, high operating margins, and strong cash generation. There still exists short-term opportunity to regain lost market share after the group underperformed relative to its competitors. Given Mr. Price's high component of cash sales, it's unlikely to be affected to the same extent as other retailers by the new credit regulations. Nevertheless, no material improvements are expected in the consumer environment in the near term. Intense competitive pressures are likely to persist. High levels of discounting and promotional activities in the apparel retail sector has changed consumers' perception of value and will continue to weigh on margins. However, the group's margins is still on a high base relative to its peers, and the opening of the new distribution facility in Hammersdale is anticipated to yield efficiencies. Now taking a look at the financial review. Mr. Price delivered a good set of results for the interim period ending September 2017, driven by an improved performance by Mr. Price Apparel, Miladies, and Mr. Price Money. Mr. Price Home and Sport came under pressure as the merchandise offers in these chains are considered a more discretionary buy. Total turnover increased by 6.7% to 9.8 billion, with retail sales up 6.4%, while on a like-for-like basis, retail sales was up 4.6%. Cash sales increased by 7.2% and accounted for 82.4% of the total sales. Credit sales were 5.1% higher. Retail selling price inflation was 2.6%, and unit sales increased by 4.2% to 97 million units. Adjusted operating profit increased by 22% to 1.5 billion, resulting in a 200 basis point improvement in the operating margin to 15.7%. Headline earnings increased by 24% to 1.1 billion, and diluted headline earnings on a per-share basis increased by 24% to 424.1 cents per share. A gross interim dividend of 279 cents per share was declared, 22% higher than in the previous year. Now taking a look at the divisions. The group mainly consists of three divisions, namely apparel, home, financial services, and cellular. Apparel is the largest and retails clothing, sportswear, footwear, sporting equipment, and accessories. Apparel contributed 71% to the group's retail sales and 69% to operating profit. Apparel consists of Mr. Price Apparel, Mr. Price Sports, and Miladies. Home is the second largest and contributed 23% to group retail sales and 19% to operating profit. The home segment consists of Mr. Price Home and Sheet Street. The financial service and cellular is also known as Mr. Price Money and manages the group's trade receivables and sells financial services and cellular products. This division contributed 6% to group retail sales and 12% to operating profit. Now taking a further look at Mr. Price Apparel. Mr. Price Apparel's retail sales increased by 10.2% to 5.6 billion, while on a like-for-like basis it was up 7.8%, with retailing selling price inflation of 2.6% and unit sales growth of 7.4%. The group continued to focus on assortment and value propositions, which started to yield results. Ladies and men's outwear, as well as junior arty business, recorded double-digit growth. Local and foreign sales rose 10.5% and 6.2% respectively. Online sales recorded robust growth of 29.7%. Mr. Price Apparel has the highest number of Facebook and Instagram followers in the SA fashion retail sector. Operating profit improved on the back of strong gross profit. The trading space increased by 3.4%, however the trading density declined by 0.7%. Management indicated that the stock at hand is in a much better shape compared to the prior period. Now taking a look at Mr. Price Sport. Mr. Price Sport contributed 9% to apparel retail sales. The retail sales increased by 1.5% to 644 million, while on a like-for-like basis it was down 4.6%, with retail selling price inflation of 0.9% and unit sales growth of 1.1%. Sales were impacted by the discretionary nature of the sports merchandise. Footwear sales grew by 10.4%, while ladies, men's and youth apparel all recorded sales growth of between 3 and 4%. Equipment and outdoor departments disappointed. Gross margins improved while operating margins were impacted by inflation and space growth. The trading space grew by 6.3%, while the trading density declined 3.5%. Miladies contributed 8% to apparel retail sales. Miladies retail sales increased by 11.9% to 651.8 million, while on a like-for-like basis it was up 11.8%, with retail selling price inflation of 9.3% and a 3% increase in unit sales. Apparel and non-apparel sales rose by 16.7% and 5.1% respectively. The gross profit improved on the back of lower markdowns. Trading space contracted by 0.5% and trading density improved by 5.8%. Mr. Price Home sales declined by 2% to 1.6 billion, while on a like-for-like basis it was down 3.4%, but would have been flat if it was not for the closure of the group's flagship store due to storm damage. Retail selling price inflation averaged 2.1%, while unit sales was 3.5% lower. Profits was impacted by a very strong comparator. Trading space rose slightly by 0.3% and trading density declined by 1.1%. Sheet Street contributed 31% of the homeware retail sales. Sheet Street's retail sales increased by 2.1% to 694.7 million, while on a like-for-like basis it was up 1.1%, with retail selling price inflation of 5.2%, offsetting a 2.7% drop in unit sales. The living room department recorded strong sales growth of 8.2%, while the bedroom department sales fell by 1.4%. The gross margin was impacted by increased promotional activity. Operating costs was well contained below inflation. Trading space marginally increased by 0.1%, while the trading density improved by 3.2%. Now taking a look at Mr. Price Money. Credit contributed 42% to Mr. Price Money's revenue. Credit revenue arising from interest and charges rose by 6.6% to 229 million. The monthly service fee increased to R8.50, while the initiation fee remained unchanged. The total debtors book grew by 4.3% to 2.1 billion, with an impairment provision rate of 7.3%, comfortably ahead of the net bad debt rate of 5.9%. New account application was up 6.6%, while account approvals was flat, limited by income verification rules. Insurance contributed 22% to Mr. Price Money's revenue. Insurance revenue increased by 15.2% to 121 million, driven by a good balance between growth in volumes and price. Cellular contributed 36% to Mr. Price Money's revenue. Cellular revenue declined by 5% to 195 million. Mr. Price Mobile temporarily slowed down to focus on process improvement. The group tested the sale of handsets, SIM cards and accessories through an in-store kiosk, and the results exceeded management's expectations, with a further rollout planned. Airtime sales rose 4%. Now taking a look at the company guidance. The group successfully completed the new distribution facility in Hammarsdale on time and within budget. Congestion at the Durban port remains a concern. However, management is looking into solutions to minimize disruptions. The group added 29 stores in the first half of the year, placing it on track to achieve its annual target of 43 stores. The group expects the trading environment to remain challenging. However, first signs of positive summer trading was experienced in October, with sales growth of 8.3%, and the positive momentum continued into November. Now taking a look at the portfolio guidance. Mr. Price has a weighting of 0.8% in the CAPS Wix index. We feel that the share is fully valued and would recommend 0% exposure. Before I end off, please take note of the following disclaimer. Should you wish to place a trade, please contact our trading desk. Should you wish to ask questions, please type them into the chat box. That concludes my webinar. Thank you and enjoy the rest of your day.